Hi, this is Brent with another chart breakdown for trade therapy. Today is Wednesday, November 6th. We are looking at SMCI, which we did our clarity spotlight on last week. For those of you that are not reading trade therapy content or keeping up with our content, you should be. We've been covering SMCI all year. You could have profited from this downside move. We did. We took a short position and did very well. We're going to walk through some charts and explain to you how and why we did that. This was one of the first charts that we shared back in June of this year. It has the telltale sign of distribution. Whenever you see a really heavy volume shelf, an upper shelf in the volume profile, that is distribution. It's pretty obvious for anybody that really understands technical analysis. They should have been able to tell that in a few seconds. We also shared back in June a detailed breakdown of the distribution process. These are Wyckoff tags. If you're not familiar with Wyckoff, these are basically events or kind of signposts, footprints, if you will, of large institutions selling off their positions. When large operators hold very large positions, there's a process that they go through to unload those positions so that they don't drive price down by dumping too much supply or trying to sell too much of their position at any one given time. That creates these choppy distribution ranges that have basically milestones or certain events that mark what stage the distribution process is in. Here in June, we identified that this is either going to set what's called a last point of supply, or it may extend up and put in what's called an upthrust after distribution. We weren't sure what it was going to do at this point, but we did know that at this point, it is going to go through a markdown process. We did share on all the socials that SMCI is about to distribute. Unfortunately, a lot of popular high follow accounts on the social networks don't really identify these types of phases very well. They were still posting bullish charts, and it created a lot of confusion for a lot of people. So we did share this a little bit later as it got a little more mature. We did come back in October and revisit this. SMCI did not extend up into an upthrust after distribution. It did post that last point of supply. And what that means is that's the very last part of this long position that the larger operators were still trying to sell before they dropped the price back down so that they could reload their positions. That's what a markdown process is. That's what's transpiring right now within SMCI. We'll talk a little bit about this accumulation range in a second. So back in October, it had broken through resistance. If you can imagine a short trade going down here, there's resistance right here. That's what's called the ice. Once it falls through the ice or breaks resistance to the downside, it will back test it. This is called preliminary supply right here. That's what it's doing. It's back testing the broken resistance for the short trade. So it backs up there and then continues its markdown process. We shared this back in October to identify this as a redistribution range. We said very clearly in our posts that you need to beware of these minor up thrusts during a markdown phase. We knew that this reaccumulation range was the most likely area that it was going to accumulate. Those that follow and read up on trade therapy content, we tell them all the time, these prior reaccumulation ranges in the previous uptrend is generally where these markdown processes will come down and then accumulate. Again, larger operators that held this long, sold it off, are pushing price back down so that they can accumulate their position again. I've just jumped over to a live chart. This is today's chart. It is a weekly chart, but you can see that it did redistribute exactly where we indicated that it was probably going to push off of there. It did complete its markdown process. We have been sharing on the socials that it needs to hold this level right here. So 20 to 21 is the last level of support that it needs to hold. If it cannot hold that range, if there really is something fundamentally wrong with the company, Obviously, Ernst & Young resigned as auditors. Never a good sign when your auditors step away. But if there is something fundamentally wrong with the company, then we would see more downside here. It would not be able to hold this last level of support, which is in the low 20s, right? Roughly 20 to 2150. If it cannot hold that, it has no support in here. Price will drop down, and it will most likely accumulate down here somewhere below $10, possibly even down to the 560, 568 level and below. If there's something fundamentally wrong with the company, there will be more downside. If there is not, we're suspecting that there is not because we're not seeing massive volume. We're not seeing massive supply being dumped in here. If there were general concern with the viability of SMCI, we would see larger volume spikes here, and we would see price dropping down much further, going through this inefficient range right here in the chart. Price could easily, very quickly drop through here. There's not much support. So the fact that it's holding this range right here at the last level of support right here is a good sign for bulls. If you're looking to we are going to be looking to possibly enter into a long position here. We're going to watch this accumulation range build out. Late stage, there's probably going to be a dip just below that, might dip down to the 382 level, the 382 Fibonacci level at 1838. So expecting a real quick accumulation structure here. Don't think it's going to be a long drawn out process. We think that it will accumulate quickly and most likely move back up and out of the range. The first target would be the 200 weekly exponential moving average here at 30, then this 236 Fibonacci level at 38. Then on up into to the 50 level. So those of you that did get a chance to read Clarity Spotlight last week, hope this chart review was helpful. For those of you that are not following it, you should have. You could have joined us in this short trade. We did very well. Hope this was helpful, and hope everybody enjoys our chart breakdown videos.